Hello everyone, welcome to Monday Market Must Knows. We're going to talk about the three things that are really going to impact your trading week, and as always, it's three things, but there's subsets, so it's like 23 things. Let's start off with probably the most important piece for the week, which can be earnings. We've been talking about this for the past 3 Mondays. Here's why this week is so important. You have 176 companies reporting this week, and a lot of them are retailers. What we decided to do is actually give you a little bit of a calendar. We'll start off on your Tuesday session. You have in green are the ones that have been really overperforming the market, much better than the S&P. In red are the ones that have really been beaten down. So you notice we got Walmart and Home Depot, which have been absolute leaders in their sectors. You have Kohl's reporting on Tuesday, which has been absolutely horrible. You have Advanced Auto Parts, and then Cree, which has been one of the major movers for the best performing sector in the financial markets, semiconductors. Wednesday brings us Target. So you got Walmart's competitor. You have Nvidia, which is just skyrocketing. You have Lowe's as well. And then 3 terrible companies at this moment in time. You have TJ Maxx, you have Nordstrom's, and you have L Brands. Thursday brings in more retailers such as Ross Stores. You also have Estee Lauder, you have Dillard's, and then, oh, look at JCP at an NQ. You know why? Bankruptcy. Bye-bye to that one. Let's hope Robinhood traders buy more of that thing. You also have Alibaba reporting earnings on Thursday. And then Friday brings us another retailer. We do have Foot Locker. Yes, I'm sure their sales are through the roof. I'm being sarcastic. That's your earnings calendar for next week. Next up, we're looking at economic data. That's right, we're going to check out manufacturing numbers. And we normally don't talk about manufacturing, but it's important this week because you have 3 different manufacturing pieces of information being reported. The first one comes out on Monday, and that's called the Empire State Manufacturing Index. Really what it's looking at is manufacturing sentiment in the New York Empire State area. Now, what you notice on this chart is how aggressively it sold off due to COVID. Anything below 0 means we have a manufacturing contraction. There is a loss of business in those areas. And of course, that was very aggressive to the tune of negative 75. But recently, we've had a spike back up. You see that most recent number is at 17.2, and we'll see if that trend continues to show some optimism in the manufacturing area in the New York State area. Then we move to Thursday, where you have it for the Philly Fed Manufacturing Index, and you notice a very similar picture there with regards to their numbers. Big decline in the first part of the year, and now all of a sudden 2 consecutive months of positive numbers above 0, which is good, means we have expansion in manufacturing in the Philadelphia area. And then finally, on Friday, we have another manufacturing piece of data coming out, and that is the flash manufacturing PMI number. Again, that's just a relative sentiment of manufacturers out there. It also is above that 50 line. This chart is a little bit different because it uses 50 as its 0 line. So anything above 50 means we have expansion, anything below 50 is contraction, and you notice that it's up. So right now, it looks pretty good from the manufacturing front. We'll see if that trend continues. Of course, any moves up in these numbers could mean more upside movement for the equity markets. Finally, moving on to our last piece of information is the US dollar, the greenback. This is a very important piece that a lot of new traders ignore and don't pay attention to, and it's the value of the dollar. What does a dollar mean? Well, let's start off with what a strong dollar means. If the dollar is really strong, what that generally equates to is a falling market and slow economic growth. Well, why is that? Because if a dollar is strong, that means that foreign investors and foreign consumers and our exporters can't sell as much because it costs more money to buy each item. So if our dollar continues to rise, let's say it goes from 1 to 2, well, all of a sudden that means that foreigners can buy half as much goods and services. It's also bad for commodities. Right now we have a situation where we have a very weak dollar, which has been helping bolster these markets to the upside. It means we're going to have strong rising markets and a strong economy. So let me show you a chart of the US dollar on a daily basis. And you can see that spike at the very top. That was the March lows of COVID, the whole pandemic issue. And then we had the huge rally. That rally has been fueled by an extremely weak dollar, and you can see it's bottoming right now, kind of basing on the hard right edge of your chart. Well, is there a point where this dollar may now stop and turn? We can look at the weekly time frame to get a better picture of that, and something we've been looking at in our XLT sessions is this demand level that goes way back. You see that nice strong weekly demand level? We've been bouncing off that for 2 weeks. If that demand level holds, it means this dollar does have a good probability of moving to the upside. If it does, what does a strong dollar mean? It means it's going to be weaker for our markets. And since we've conveniently hit all-time highs in the equity markets, this could be the piece that starts to turn our markets to the south side. That said, if that level of demand is broken, there's another level of demand that's much, much lower. That also means if we get to those lower levels, the equity markets will skyrocket even further. That's it for your Monday Market Must-Knows. Hope you guys have a fantastic trading week. We'll see you next time.